What's up, everybody? Tom here with another video. Well, you're probably asking yourself right about now, what just happened to the tech stocks in the stock markets? Are they about to crash? Is something big and sinister on the horizon? We'll be answering that hopefully throughout today's video and many more questions. But it may not be what you think. It may not be what the mainstream media is telling you. It's funny how the market runs into an event and then it's that buy the rumor, sell the fact style of trading. Wall Street, they're sneaky, and we'll be talking about that and more throughout today's video. Stay tuned. So here begins our recap for the markets closed 27th of July 2021. And in today's video, we'll be going through everything to do with these markets, including our technical analysis levels for gold, Bitcoin, S&P 500, Dow, Nasdaq, of course, and others. And I can tell you straight away that it was a sea of red for tech. All tech was bad. It was much worse than this during the session. And, you know, is it something we need to be worried about? Well, I think there's several key things that we need to look out for. And it's not going to be what we read in papers. It's going to be the hard facts of what's really going on. So before we go anywhere else, of course, Apple's blowout earnings didn't help its stock. And here's why. And they write this entire article about everything, blah, 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 about, 2% decline, etc., etc., etc. I tend to go with this is why. Guys, do you know how many calls were sitting on Apple ahead of the event? Let's just have a look at this. Call total. Look at that number. Then look at this number of put total, and then specifically think about where all of the big levels were. 150, 150, 150, 150. When you go to the expiry and you know that most Apple stock or most stock in general, most options in general don't expire worth anything, and you know that all of these 150 strikes are expiring on the 30th of the 7th, and there's that many calls in there, who's there? It's retail. What do Wall Street hate to do? Pay retail out on options, especially call options. So there is a very key delineation between, buy the rumor and sell the fact, and also lining that up with options expirations. And in this case, 150, it was just too much for Apple to overcome. And that is part of the reason. In fact, I think it's the main reason that the market came down. It's not really anything else. It's usually something like that. So let's now take a look at the indices here and just quickly go through. So we had, of course, the Russell and the Nasdaq finding weakness there in the early session. Hyper stocks particularly hit hard. Everything rallied into the close of the day, which typically looks good, but I think it's a little bit too early here to tell, and we'll go through that soon. And this is part of the reason why. If we have a look at the sectors, let's just look at these. Utilities, wowzers, 1.72%, one of the better returns that we haven't seen in some time in utilities. Now, utilities is always considered a defensive sector. It's a bit of a crappy sector to invest straight out of a crisis. Generally, it is not one that does that well, and it does better later on after all of the value's been extracted in the growth sectors, financials, and everything else like that. Now, if utilities goes up a little bit too much in the short term, it's often seen as quite a bearish indicator, and I definitely pay attention to it. We've also had XLP, which is consumer staples, another defensive area, real estate, and healthcare. All areas, including the water sector as well. So all areas that are very considered with Wall Street moving out of growth and into a little bit of defensiveness, maybe positioning there for the future. When we're talking about future, we know that if we look at the 20-year averages of the Nasdaq, which is pretty much the main focus for the bear case right now on the markets, is bad or at least stagnant here for August and September. And I think a lot of that's just got to do with the earnings are over during that point, the great returns are had during that July period, and Nasdaq goes into a stagnation or slight decline period over August, September, over a 20-year zone. It's pretty consistent, and it's definitely something that we'll be watching on this channel. So why did it all happen? Well, of course, we had the Apple earnings, the AMD, the Microsoft, the Alphabet. They all came out, and look, across the board, amazing results. You can't deny they're making some sweet money. We've got Facebook later on the week, PayPal, Qualcomm, Amazon, Pinterest, Twilio, so many big names coming out. But it's like that anything really. Like you go and you're the first one to go see a cinema film, and you see the pre-screening and you tell everyone about it. It's all hype. Kind of reminds me of like Star Wars, the new one that came out a few years ago, and everyone was so hyped for it. And then you go in there and you watch it and you're like, yeah, it was a pretty good film. Maybe you disagree. Maybe you think it was the best film ever. But you're like, yeah, it's a pretty good film. But, maybe it doesn't live up to the expectation of how hopeful you were that that was going to be awesome. And I think that's a great analogy here for when we're talking about the stock market. The reality is not necessarily as good as the stock market move beforehand. So always think, if it's running into the stock market result, maybe they expect a little bit too much. We know the general market during August and September shows a little bit of weakness. Specifically, September is the bad month. Just be warned on this, just the general stats. We do follow stats here on the channel. We need to look at those types of things. And when we can put them together with options, expirations, we can put them together with technical analysis, we really can come out making better informed decisions. And that's a lot about what this channel is. If you're interested in that type of stuff, remember to subscribe, hit the like button as well, as it's one of those things that I really want to empower people with more knowledge, but more importantly, being able to cut out the crap, for lack of a better term. That's the type of thing that we really want to be doing. So here's the VIX. This is the volatility index. You can see it's starting to rise. Relatively, the market has barely moved, really. I mean, the market's been going up and up and up. So for the VIX to be getting up here at 19.35, remember, when it crosses 20, that means that there is some severe volatility. And this is the time of year that this happens. And this earnings week, I think, is a linchpin for many things coming forward here in the markets. Let's talk about the dollar index. This is the US dollar index. It just hit the daily 20 for the first time. It seems to be weakening quite a lot, which is surprising, actually. It's not surprising for the time of year, but because of the weekly closes that we've been seeing, you'd think there's more bullishness now. I would like to see the dollar index turn over the next 24 hours. This 20 moving average, it'd be a good kind of hold level for it. And the main reason is it just hit the 50 exponential from the top down on the weekly. This is a very key zone. It took a long time to break it. So I'm hoping that the US dollar actually finds some strength here, but time will tell on that one. We'll move over to gold, which is considered sometimes a hedge against uncertainty in the markets. It's not as good as you think on that, but it definitely is the season that gold should be doing better, and same with silver. And we've got this downward trend line. Now, gold's putting pressure on this right now. We also have the resistance and the resistance at 1811.50. This is a key zone that I think if the market kind of breaks and closes above here, not only has it broken the downtrend, but it's also taken this market structure, considered this level, considered the support, and there's buyer momentum here. So obviously, someone thinks gold's cheap at 1790 right now. If they bring in what we call the participation phase, which is basically where it breaks all past the resistances and it's allowed to be like, free roaming and effectively starts that exceptional kind of move. I'm hoping it happens around here. So like something that to be watching out for and something to definitely be looking at. So we mentioned before that Apple options were probably one of the key things that we should have been looking at in the markets, and just in general options expirations. And we've been talking a little bit about them on the channel. I'm going to now start bringing in options expirations to the channel in, I guess, preparation of a whole bunch of things that we want to be launching throughout the business and everything else that we're doing. So I'm a big fan of options. It's probably my biggest kind of trade area. And I think that it's really important that people understand how options market, how bond market, how indices, how everything is linked together. And you'll be surprised how much nasty business goes on. But Apple at the 150 barrier, it's just too much for it to get past there. I would be very surprised for Apple to get past 150 before expiration on the 30th. There's just too much money at stake for Wall Street. Now, where are they kind of putting in supports? Well, the support from the option side this week would be somewhere around that 140, from the option side anyway. From the technical side, if it got down to 140, what could you be creating here? A little double top, because you'd be breaking through that. So, if it got down here and then continued to weaken, we're talking about the biggest stock in the market finding significant weakness, double topping here. That would not be a good sign for the rest of the market. So we're going to start watching Apple on the daily. It's going to become important. Right now, I think it's probably trading about 143-ish after the earnings, something like that, 142. So yeah, just too much to overcome. We'll bring in the options so you guys understand that a little bit better throughout the next couple of videos. Let's have a look at Tesla now. We've got 620 or 619 as the support and 690 on the daily close as the resistance. We're still stuck in the range. We never got our closure above 660 to show the lightning bolt, trough, peak, higher trough, higher peak kind of sequence. I'm going with stuck in the range, and we're looking for movements out either way. Again, possibly options might teach us a little bit about Tesla's next move, and we'll be watching that one, because if it's allowed to be free, then it's allowed to be free. But at this stage, the market's in turmoil. to a degree. And therefore, because it's in turmoil, Tesla is at risk. And I think I'd like to see a break either way before making any more informed decisions. Now, why is the market in turmoil, you might ask? There's a lot of information in this video, I'm telling you. One of the reasons is going to be the bond market. Now, I consider the bond market the smartest market in the world. It's not because buying crappy bonds is the smartest thing to do. I mean, if anything, the bond market is bubblicious in many ways. However, when the bond market starts moving and the stock market's making all-time highs and it's rallying hard, which it does tend to rally, over these periods of time. It's in its seasonal rally right now up until October. This is something I pay a lot of attention to because remember, the bond market rallied before we saw the pandemic crash. In fact, we found out about the whole problem, maybe here, I think, and the bond market was already rallying and then it extra rallied. And then by the time that it was already up here, we hadn't even crashed in the stock market yet. We've got to remember that the stock market hadn't crashed yet. The bonds, the safe money, was already flying. So we pay attention to this because this is another bearish sign in the markets right now. And again, I am optimistic over the longer term. I love the American stock market. I think it's the best place to be. I think the innovation is exceptional. I think it's going to be a great, 4 or 5 years here. And I'm very, very optimistic. But when you're talking about trading, you need to understand the times of year, the types of things that happen. And just the reality is when you move too far away from certain things, and we discussed this on the live chat last night, like moving averages on the weekly and mean reversions, that there's time for pullbacks. So look, great rally here off the daily. It comes down to the daily 20, the point that we know is very, very good. It instantly puts in a rally here, and aftermarket, it's up to 14,955. So right where it is right now. Now, it hit our first trend line. It hasn't hit our bigger trend line over here. And there still could be a little bit of juice in this market. Even though it's a buy the rumor, sell the fact kind of event, there still could be a bit of juice. But I've been cautious. I've been telling everyone, be cautious around this time because it's one of those times where it's incredibly uncertain. And the main reason is going to be how far we are away from the mean reversion. Now, when you look at a market and you think, oh, well, this is good. It's been going up very consistently. The Nasdaq, for an example, it very rarely prints a number where it's over 8% away from the 20 moving average on the weekly. So it does go up, and it goes up well over time, but it doesn't tend to go up as high as this, as fast as this. So if we go back in history and we look at the Nasdaq and the weekly 20, you'll notice mean reversion to the weekly 20 or the weekly 50 is quite common. It's quite common over time. It doesn't usually run a percentage that's too insane away from it. It likes kind of, a little bit up, okay, a little bit of a rest, a little bit up, a little bit of a rest. Right now, it's on a bazooka, and there are reasons due to the pandemic, but this is my main concern. I think the big thing here is that if we do get a correction, and let's say it comes down from this tippity top, and it comes and kind of meets the 50, which at that point would be probably around here, there could be a good 10 to 12% kind of correction here, maybe back to the 321. That's the type of thing that we're looking at. Now, if it goes and blasts through this type of stuff and has a great rest of the year, which I tend to think that it's still going to end possibly even higher than it is right now by the end of the year, that's great. But yeah, we're starting to see those cracks coming through. We are starting to see those cracks. When do we know those cracks are present? One of the things, small companies. So if we have the Russell 2000, this is the smaller companies, they move underneath this support of 208. You know what? I'm very worried for the market at that point. And I think the market will have that correction period. This is one of the key things. So we've got so far bonds. We've got, of course, the 10-year. If we look at the 10-year, the 10-year is continuing to drop here. Not good for the financials, therefore not good for IWM. And if it kind of falls off here and at the same time we see IWM break underneath that support, that's probably going to mean that something like the Dow is also breaking under the trend line here. And when all of that type of stuff occurs, we cannot discount that. Because, if we discount that, we're going to be in problems. Has the Dow looked bad here? No, the Dow looks totally fine. It's more a problem in the tech than it's a problem throughout the entire S&P 500 or even a lot of the Dow stocks. Many Dow stocks have not performed well recently. So the same with the S&P 500. There's plenty of bad companies in there. It's the tech that I think Wall Street are going to have a go at some point soon. And I don't know exactly when, but after earnings was something we were talking about. Again, technicals here, still bullish, still in the uptrend. I'm just kind of going through my thesis here of some of the problems that I see on the horizon. I think options are probably going to be one of the other tellers that we'll use to try to figure out what happens next. S&P 500 did pull back yesterday. Let's go down to the smaller hours and smaller time frames. The 2 hour here, 20 pulled it up. Is there any really great trading here? I don't personally think so on these higher time frames, on 2 hours and 4 hours and stuff. You could argue, oh, well, I pick up the 20 time, I'm buying the dip. Yeah, that's good. And I hope it works out, but it's not like a significant pullback here. This is just, you go and look at specific stocks to find the better levels. Now let's talk about something a little bit more positive, and that's of course the story here going on in Bitcoin. This is certainly a much better. If we think about Bitcoin right now, well, not only did it come back to that 36-ish level, which is something I put on Twitter, we're talking about the Wyckoff, it's now putting pressure back on the 40,000, and that's great news for Bitcoin traders, because we get past 40,000. Let's say we get past here. We start to coil, and then we consolidate there, make market structure, and then we blast through. That is a perfect Wyckoff accumulation, and that's a very strong style pattern, and I'd be very, very happy with that. Bitcoin traders should be very happy. It's starting to get more accepted. As long as this whole thing with Tether kind of blows over, and I still think the government kind of regulation there is a slight risk for the short term on those, it should be good. Another sleeper here is probably Ethereum. As Bitcoin kind of rides high again, Ethereum is behind. It's finding this 4 hour 20, and it's definitely bouncing off that. And we've got a 2400 line here, very important zone. We close above this. Where's the next level? 2600. The next level's coming up, and it's straight after that. So there's some good technicals here in the crypto again, and we're back into this market really taking a look at it, and we're back into gold really taking a look at it, while the stock market's floundering around, and it's kind of telling us, do we need to be a bit concerned? Possibly, yeah. Let's have a look also what is happening. So we've got the FOMC statement and press conference coming out. This is Wednesday, 28th of July, and that is going to be at 2 p.m. Eastern time in New York, so New York time in America. There's just so much news coming out, so much earnings, and obviously a lot of fear on the retail side as well. I think options will probably show us the way. IWM, the Russell, will also be a big indicator. And of course, look at the banks, JP Morgan as well. If that starts to fall through, generally all these corrections start with the financials and then the rest comes through. So it's the financials and the tech that I think could be under fire, let's say, for the next couple of months. Time will tell. Thanks very much for watching, and remember to subscribe if you enjoy the videos. Bye for now, guys.